kind of discrepancy that we've been seeing all along between what investors are expecting to come out of onshore markets in terms of policy signals and what policymakers are wanting to prevent, which is kind of the very destabilizing capital outflows that seem to be still quite top of mind for PBOC. So we've seen a very strengthening bias in the currency fixes, despite the fact that the currency has continued to actually trend upwards since the beginning of the year. And that really feeds into the decision to really be quite cautious on monetary policy, just because there isn't really that much leeway to go when it comes to allowing the currency to weaken.
Right. And so where do you see the band for the currency at a time when rate differentials is also an important angle at play here?
Yeah, so I think our expectations is that the currency should start to find a bit of a floor, at least in the coming months. We obviously have pretty big political meetings coming out in April, the Politburo meeting, as well as in July, where we do expect some of the bigger stimulus signals to come into play. That should also support the currency onshore. Our analysis have shown that onshore currencies tend to perform quite well when it comes to some of the more decisive policy measures. So that should allow the currency to find a bit of a floor. But of course, you have the Fed coming in as well, possibly with rate cuts starting in the end of Q2 or Q3. So that should also ease the rate differentials vis-a-vis the US and provide some support for the currency going forward.
Are we certain about that, Louise? Because if we're assuming that the US yield differential isn't going to widen, because we've seen over the course of the last couple of weeks, at the very least, the yields cracking higher in the US. If you look at the fiscal situation there, the expectation would have to be, barring something extraordinary occurring, that it has to, for the most part, continue to track higher. So doesn't that just put a little bit of pressure when it comes to the depreciation of the yuan? I would suggest even the yen as well. And we're seeing this play out everywhere.
Yeah, exactly. So there is not much certainty that hangs around the rate differential thesis vis-a-vis the US. But we do know that at least for the last 2 years, where the currency has trended onshore has been really driven by two things. One is the differentials, which may not play such a big role in the coming months, but also what is happening onshore, what's happening on the domestic fundamentals side. On that aspect, we have seen quite strong evidence that we should be on a bit of a phase of normalization, or at least stabilization, even though the economy is quite far from being normal. That should provide some support. But to be honest, I think that the fact that we are coming into a season where geopolitical tensions are increasingly higher, we could see more weakness in the near term before we start to recover.